Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, April 30th. We're at the end of the month here and heading into May. So we got a couple of economic news releases, a couple of big ones here, and we'll start this off with employment cost index for the first quarter. So the previous reporting was at 0.5% growth, and the forecast was supposed to continue. So obviously we'd like to see this come downwards, and that's what we got. It came up at 0.3% because if the cost is going up for employment, it might be harder to get jobs for one thing. Two, it also creates inflationary problems with our economy, and that's not what we want. We want to keep inflation low, but at least some inflation to the 2% level. But in the immediate term, we obviously need jobs. The second item to note is a Case-Shiller Home Price Index for the month of February. So January we had an 8.1% year-over-year growth, which obviously is great. It's nice to see the homes increasing. And for February, it jumped up to 9.3 year-over-year. So great news there for home prices. So far we got good news. Cost of employment coming down, Case-Shiller going up. And then we got the Chicago PMI for the month of April, and that is the manufacturing section of Chicago region. So we had a 52.4%, 52.4 reading. Anything above 50 is considered expansion, so pretty modest expansion at 52.4, and anything below 50, it becomes a contraction. So the projection was it was supposed to be a slight improvement at the 52.5, and it dropped down to 49. So we're showing some contraction this month for the manufacturing in Chicago. So we need to keep an eye on it, as obviously we don't want to see any contraction in our economy or any slowdown. Then last but not least, we got the Consumer Confidence Index for the month of April. Now, the month of March was actually revised higher to 60.19, so it's actually lower than that reading. So it's actually revised higher, and we actually had a forecast of 61.3. And it actually came in at 68.1, so a pretty sharp increase that people are feeling a lot better about things, where things are going. So this could be a good sign. Obviously, we'll need to wait next month as we saw the consumer spending, consumer income, where things move towards. As we saw this week, it wasn't the greatest. So we'll have to wait and see next week, see with this new confidence that people are feeling, are they going to start spending more to get the economy moving a little bit further and hopefully create more jobs. So let's go ahead and take a look at the headline news here. And the stock market is currently in a mixed situation. Nasdaq's the only one that's actually up. And then we also have the beginning of the Fed meeting starting today, which they'll have their announcement tomorrow. So tomorrow will be a big day. See if there's any changes in the wording as when the Fed gives their announcement afterwards. Then here's something that was kind of interesting. I saw U.S. Treasury was actually set to pay down its debt for the first time in 5 years since I believe it was 2007 or 8. First time they're actually looking to pay down, as our economy was going to very grim and very horrible and stuff. And so now they're looking at paying, from April to June, the second quarter, some of that debt. So nice maneuver right there. Hopefully we can keep that, debt reduction, keeping it down. See more of that in the future. But this is the first time in about 5 years that the Fed has actually, or the US Treasury is looking to actually pay down some of the debt. So good news there. Let's take a look at how the bond market's reacting today with all the news. And actually it's reacting favorably. So we are actually looking like we are breaking out of a trend here. As you can see, we were going this straight line here, which is kind of the sideways pattern. And now we got about 3 days here, and each time it's been higher each route. So it looks like we do have a trend going upwards. I would very much caution be cautious, just because we still haven't closed this gap, and we never really even closed this gap over here. So we do have at some point probably a correction, but in the immediate term, it looks like the market's favoring the bonds, and so as a result, we're getting an improvement in the interest rates. So interest rates are a little bit better today, and we'll see how long it continues. You guys have a wonderful day. Thanks for watching. We'll see you guys tomorrow. Have a good day.